back to another episode of the Startup Voyage podcast. And today we are talking about automating liquidity and how Solutions is empowering early stage crypto projects and even bigger players. In this episode, we will explore the pivotal role of market makers in Web3 ecosystem and how they ensure liquidity and price stability in this fast-paced world is managed. We are welcome with our guest, Peter Chong. He is the co-founder of Solutions, and he will guide us through the intricacies of market making and its critical importance to both established and emerging crypto markets. So Peter will unpack the challenges small and medium-sized Web3 projects face in maintaining liquidity and how traditional market making solutions can be cost prohibitive and how they're solving for that. We'll look at innovative approaches that Solution is deploying to transform this landscape through automation and leveraging advanced hardware and software solutions to empower small projects with the tools that were previously accessible to only large-scale players. Now, this episode will not only educate you on the mechanics of market making, but will also showcase how Solutions is leading the charge in making these essential services more affordable and accessible, thus fostering a more inclusive Web3 ecosystem. So Peter, thank you for joining the show with us today.
Thank you very much, Arthur. It's a pleasure.
Okay, so before we start, I guess maybe you can give a little bit of background about yourself. I understand like you've got a master's degree in engineering and, you've co-founded this company, Solutions. And tell me more about your journey into the Web3 space.
Sure, definitely. So I was like everyone else. I did my engineering degree at Imperial College, and then after that, I started doing some engineering work for someone else, and then I wonder what I can actually do in the world, and then I get in touch with Web3, and in Web3, actually everyone as an entrepreneur, our startup ground is basically the same. So I really like this field. So I actually joined the Web3 world in 2018, and then I never left the industry. I just love the industry. So I actually work as a software developer at Hextrust at first. So doing crypto custody, doing anything safe related to the law. So that's how I started my ground. And after that, I went to different places to do trading on exchanges, on OTC shops. Yeah, just basically doing a lot of trading. So I was a support engineer at Equity Trading. That was a high frequency trading firm. So that's where I learned market making, the key concepts. And then after all these working for other people work, I just started up my company 2 years ago. We called it Centralline Analytics. Initially, we thought we can actually compare lots of different people's market making strategies and then just give the analytics so people actually see how good or how bad other people are. So yeah, that really set off our journey from market making. So right now we have a brand new name. It's called Solutions. So yeah, that's it.
Okay. Well, I guess for the audience who have maybe heard the term market making, or if they've done a little bit of research around it, can you maybe explain in a very simple manner the concept of market making and the realities of why it's needed in the crypto markets?
Yeah, absolutely. So in simple terms, it just you're trying to make a market. So when are you going to have the market? When are you not going to have the market? So when you build a new product, you want to list your tokens on an exchange. That means your tokens is listed, but that doesn't mean you have orders. So market making essentially is placing limit orders or different kind of orders on the exchange. So when you as a public, you can just go on there and buy and sell effectively. So when we say effectively, when you buy and sell it at the same time, you probably won't lose a lot of money. Because if you buy and sell losing a lot of money, that actually means the market is not efficient. And a lot of mid-size or smaller size tokens are actually in that situation right now. Because Web3 is really new. So there are lots of traditional market makers in the field that you need to get a license. For example, in Hong Kong, you need a license to do market making for the Hong Kong Stock Exchange. But in the crypto world, we don't have license specifically for the market makers. So so for the Web3 world, yeah, we just need to wait for the regulation as well as like improve on a lot of the efficiency for the small and mid-sized projects.
Okay. So I guess just to be clear, market making is something that happens across all capital markets. It's not uh, I guess new or very only for the Web3 market. If you
Yeah.
look at market making in general as a concept again, would you say then you're just helping to you amongst other market makers are helping to manage the inventory for a project? Is that fair to say?
Yeah. You
Yeah.
help them to manage the inventories because all of the time, for example, you have your listed coin, for example, it's called ABC coin, and then you got to put your ABC coin with a USDT pair most likely, and then you are going to turn off your market making algorithm, and then automatically it will just place order, and then it will create the markets that is not exist if you just switch off the algorithms. So yeah.
Okay. So, and how often do you optimize the algorithm, or how often do you analyze it to see if it's being efficient, and how often do you actually make changes to that algorithm?
Yeah, I think for a lot of shops, the crypto market shops, they
Mhm.
actually change it very oftenly. Because if you are trading with Bitcoin, Ethereum, those are the Bitcoins. Those Bitcoins, you need to constantly change it because there are lots of people, a lot of participants trading on them. So the strategy can change very rapidly. But whereas our focus is actually on the mid-size or the smaller size, those projects, they don't actually have that much liquidity. So for us, probably just change the strategy for in 1 day or maybe in 2 days, because ultimately liquidity is not so much. So there aren't that much competitor, there aren't that much to change.
Right. So I guess to clarify for the audience, when we speak of liquidity, basically that's the ability to sell the token, and whether you're trading it for fiat or for another cryptocurrency. Is that correct?
Yeah, that's
Yeah.
right. That's right. It could be the sell direction, it could be the buy direction.
Right.
Yeah, that's right.
Yeah. So if you have a project that doesn't have market makers to help, typically an exchange would not accept it, right? Or the exchange that they listed on are usually the ones that manage the relationship with the market makers. Is that right?
Actually, when you try to list the projects, I think basically all the crypto exchanges, they will ask you who is your market maker, because they want to show that when your token got listed, you actually have some liquidity, because that is how the exchanges make money.
Right.
Ultimately, for the exchanges, they want to initially take you a big lump sum for the listing fees, but then they actually want you to continuously give them more money. How do they
Right.
actually get that money? Is actually by trading. So if you have a market makers, they it's more easy for the public to trade against the market makers than from public to public. So that is the ideal world that the centralized exchange are plotting out.
Okay. So with Solutions, when you work with projects, how is that advantageous for the projects when they actually go and promote themselves to get listed on an exchange? Is it? I mean, I guess. Well, what are the main I guess reasons an exchange would say, okay, this market maker is good? Like, what criteria do they use to determine a market maker's ability to create liquidity for that project?
Yeah, so basically for any kind of big or small exchanges, they have certain criteria. For example, they have one criteria is on the spreads. So basically, in Binance, you don't see big spreads. Normally, it's within 0.5%. If you are going to Bitmods, they are asking you for maybe 2%. If you go into lower tiers exchanges, they will ask you for a more relaxed spreads. But ultimately, they will have some form of requirements. When you list it, you need to maintain some certain of spreads. And for that spreads, you need to at least put maybe 1,000 or maybe 4,000 equivalent of your tokens of money into guaranteeing the spreads. Because if you just put a very small amount on a spread, that doesn't mean anything, because people, when they just
Right.
sell a big chunk, then the price will move really hugely. So
Right.
so they want to ensure that at least you have 1,000 or maybe 4,000 at the closest spread.
Right, right. Okay. So I guess like one of your solution itself, and we mentioned that you help a lot of these small and mid-sized Web3 projects. So when it comes to liquidity challenges, um, and what are they? Is it that working with the market maker is too expensive? They haven't built up enough demand for the tokens? And what are the challenges that these guys face?
Actually, we have three kinds of models in market making right now. So for example, I would say the GSR of Intermill, they develop a model that is taking your tokens. We call that token loan model. They don't take the USDT. They just take a lot of your tokens, and then your project basically becomes their projects, because they're actually holding a very big chunk of that tokens. Because initially, when you launch your projects, you probably give out 3% or 5% of the total supply of your own tokens, and there aren't that much circulation out there. If you loan them to someone else basically have that authority or whatever they can do with your token. So it's not necessary for them to dump, but there are lots of strategies for them to actually uh, earn money in their own interest. So yeah, so that's the traditional way. So if you don't want to do that, you can choose the other ones. But the GSR of interviews, they actually have the biggest name. So when you actually are out there, people generally will give you more respect if you are engaged with the big players in the marketing field. Another model is from DWF Labs. They actually do discount models. So for these discount models on market making, they actually helped people to do market making, and then you need to give them a discounted token price. So they will just buy off your token with 10% or maybe 20%, and then they can trade off in the market freely. So that is another model. What we are actually doing something different would be we actually give a lot of autonomies to the project owners, because ultimately it's their own projects. If you want to maintain certain price range, you probably should have a say on that, and that is your own liquidity. So yeah, that is what we actually give back to the users. And for the different kind of models, you kind of have to let the third-party market makers to earn money. Otherwise, they will be gone. But ultimately, it is your own projects. Like you don't need really technical knowledge to do a lot of spread adjustments if the given tools are already really good. So that's why we really want to focus on the market making tools to give you that experience that you can, as a marketing professional or design professional, you can just easily follow up our online documentation and then just do all the configuration yourself. Because ultimately for our solution and the clients, we are targeting on the smaller markets. So that would be completely different to the bigger players. They're targeting for the bigger coins and bigger money.
Okay. So, how has the feedback been then from exchanges that that these guys are trying to list on? Do they like the solution? Do they feel confident in it? I mean, what's the feedback been?
Yeah, so right now we are actually seeing different exchanges. Right now we are engaging with Gate.io Labs, and then the Binance Smart Chain. We are still actively talking to them because ultimately, if the smaller tokens can have market making themselves, which they don't need to spend a lot of time dealing with market makers, is a lot favorable for the exchanges to engage us because we are pretty easy to sell. So yeah, we're still in active communication with them. So yeah, the prospect is good.
Okay. So with your solutions and working with these smaller projects, you said there's not a lot of technical knowledge that is needed to manage the market making. Is there like a certain volume, like a minimum or threshold of volume before they they kind of need some help, technical help, and maybe
Uh,
consult your team? Yeah.
Yeah, so we definitely may want to compete with the big players. So we're actually
Mm.
setting a boundary. So if you are a token that is beyond the top 300 tokens, that will be our targets. Because
Mm.
we can see that the market, most of the market makers, they're really targeting and surfacing the bigger coins. And
Right,
whereas
right,
we can just follow the long tail because we believe even for smaller coins, they have great values that are yet to be explored. So
right.
that would be a very different target for us.
Okay, okay. So you mentioned before that Centralline Analytics was your, I guess, original company, and then
Yeah.
now it's MM Solutions. Did you partner with somebody, or did you just kind of shift the value proposition?
Yeah, I think actually both. So initially I started the Centralline Analytics. It's just an analytic platform plus market making. So
Mm.
we have been doing projects on the smaller size for quite some time. And we got projects from GameFi, meme coins, NFTFi. So we actually make these quite successful projects. So that's why we want to really expand the tools for some other people to use. Because we basically used that 2 years to fully test it, the algorithms, the core logic. So everything is ready now. So we can
Mm.
just actually ship it as a tool for other people to use. When we actually ship it to other people to use, when we call analytics, people automatically think something else. So
Mm.
that's why we want to rebrand it. And then I found a good CTO for us to
Mm.
actually uh, do the proposition as a tooling, because previously I was just managing everything myself with my
Oh,
team, but that is more on the trading side. But right now we
mm.
just not just want to have the trading, we want to have the trading as a tool. So that's
Right, right.
something different. Yeah.
Yeah. So with the Centralline Analytics, I know you're doing a lot of research on other market makers and what their strategies are. Is there then something, they have copy trading? Do they have like copy market making? Is it sort of like what you guys are essentially creating for these guys, right?
Yeah, absolutely. So there are quite a few standard strategies.
Yeah.
What we observe is we call it Avalanta market making
Mm.
because the this market making strategy is from the author of Avalanta. So that is basically setting off the inventory level that you prescribe to it. So if
Yeah.
you want your ABC coin to be 50 and then your USDT coin to be 50, you will automatically adjust the spread to that ratio. That is a traditional market making way of doing that. But
Mm.
for the other stuff, like for example, if you listed your coin in KuCoin as well as in Gate.io, sorry. So you basically want to copy market making from one exchange to the
Mm.
others. So
Right.
that are also inbuilt in our systems. So
Nice.
basically, you can just really click what you want, and then you can just fine tune the parameters. Because ultimately, the risk is low.
Yeah.
If you are doing market making on the like really high frequency stuff, then definitely you can lose money in just 1 second, right?
Hmm.
But if you are like tuning your parameters, you can actually see how that actually affects on the orders that you place in the market. So
Right.
that means if you don't like the strategy, you can just change it. You can just see the effects before you actually understand the full picture of this. So that is actually something innovative because you can only do that on the smaller coins.
Hmm. Right, right. So then when it comes to market volatility, does that really not really impact the smaller coins as much? Because the trading volume is usually very low and not much movement, right? So it's not like high frequency trading.
Yeah, absolutely, absolutely. So the way that we actually want to stop the big fluctuation is by placing multiple orders in
Mm.
multiple levels, right? So we have that strategy inbuilt. So basically, on each order level, you can set how much you want to put inside. So
Mm.
typically, you at the higher level or the lower level from the mid price, you would actually want to increase the amounts that you want to put in. So when it falls, it doesn't fall as much. When it rises, it doesn't rise as much. So these things can all be automated because ultimately you have when you negotiate with your investors or the community, you know when it's going to be the market release, you know when it's going to be the any downfall. So basically, you can adjust the spread accordingly, and then in that way, you can actually fit the market expectations.
Okay. And then what has been the investors' feedback? When you guys got seed funding already, there must be a lot of interest in your solution, obviously, to help a lot of the new guys coming into the market.
Yeah, I think generally the feedback is quite good. I think it will be half-half. Some of the investor already invested in big players. They don't really want to care for smaller coins,
Right.
small players. But I think the other half, I would say, are quite keen on us. So that's why we have like continuous meeting. We have continuous engagement on different kind of aspects. So not just for the VCs. We actually have engagement with the exchanges, with different kind of layer 1, layer 2 solutions. The one that we got more engagement with is the Elf Ventures. It is also a VC arm, but they have a layer 1 chain as well. So, for example, for a chain, when they want to support some projects, those projects will eventually go to exchanges, right? So
Right.
it will be natural for us to actually engage them first, and then when they need to list anything out, we can really help them.
Right. Okay. So then, with the investor side, then maybe you can continue sharing that with us. Like, what's the from an investor's point of view, looking at a project? What are what's the addressable market size? And I know you already mentioned that you're helping a lot of the coins below the top 300.
Right.
But I guess tapping in also into the deep end market, lots of opportunity there as well. So what
Absolutely.
is what are the top, I guess, 3 opportunities to invest in your company?
Oh, sure. I think for the market size is big. We would say actually the top 3 companies occupy around 80% of the shares already.
Mm,
So there aren't that much room for new players, but we actually see that market making is a very big thing because there are going to be more tokens coming out. The smaller and mid ones especially. So we actually expect the market expansion to be really rapid on the
mm,
small and mid-size market. Right now it's around 1.8 billion for the market making industry. Yeah, and for the DePIN we have around projected to be 3.5 trillion in the 2028. So
yeah.
ultimately what we want to see is market making plus DePIN, because for us we don't just actually earn money directly from the people who do market making with our tools. We
Right.
actually have a token mechanism. That is actually what the investors ask most, because
Okay.
how do we, as a market maker, to create our own token? How does that actually work? So that would be the biggest question.
So then when you're, I guess when you're speaking to some of these investors, some of them probably are very used to traditional market making. Um, what are the key differences between something that's automated and something that's traditional? Is it the manpower that the actual technical knowledge that you need to find,
Mhm.
or is it the
The reputation.
reputation, I guess, of a market maker in order to get listed on the big exchanges? What are the differences for creating it or putting an automated solution in place?
Yeah, I think previously for the centralized exchange, the SEXs, they actually only have order book strategies. You must have an order book in an centralized exchange. That was the common norm before.
Hmm.
And the common norm for the DEXs, these decentralized exchanges, they are just AMM, automated market makers.
Right.
So basically just put token in, 2 types of token in at least, and then it will just automatically adjust the prices based on the amount of trading that you want. These two actually they are not competing with each other. Yeah, they can complement each other.
Hmm.
Um, a lot of the times when we do market making in the centralized exchange, we can see there are lots of public trades, and there aren't that
Right.
much public trades in the DEXs. It's because people are generally already familiar with order book exchanges, so they have a large pool of um, uh, public audience in the centralized exchange, and they can really onboard people easily because the KYC process, the trading experience, everything is really similar to what they had when they were trading in the Hong Kong Stock Exchange or maybe with the US Stock Exchange. So so on that side, we can see the exchanges are really focusing on how to onboard users, and they have been doing a really successful way on that. So when we actually do market making, we want to do market making primarily on the sexes, and then we help to remove the arbitrage opportunities from the DEXs. That is our traditional play. But in the future, definitely we're going to have like order books exchanges in the DEXs as well. So that will be another topic for another time. Yeah.
Okay. So can you name some of the projects you've been trying to help or you've helped already in order to manage liquidity and making it more effective?
Yes. Previously we have a project called MetaStrike. It's basically a counter strike in Web3. So that has been quite successful. When we actually start to do market making, the price actually went up a lot. Because for GameFi, for meme coins, for NFTFi, prices and the volumes are really important. So
Right.
if you are really just doing a lot of marketing without the price or the volume, I would say follow up, it won't actually have much effect. But once you
Right.
do that, the whole effect will come. So
Right.
those kind of categories will be our main target as well.
Okay. So how, I guess with you have a cloud solution, you have a hardware solution.
Yeah.
Is it a choice between one or the other, or can you use both at the same time?
Definitely you can use both at the same time, but we actually want to roll out our cloud solution first, because for the
Mhm.
cloud solution, it's actually a lot easier for people to onboard.
Mhm.
Because whatever you do on cloud, you can just use it on your phone, use it on anywhere you like. But for the
Right.
hardware solution, it's more secure. It's basically we can't front run you, because on the cloud there's always a risk, or always the perception that all the MMs are not trustworthy, including the MM solution. So I should not do anything on the MM cloud. So we actually have the MM box solution for you to actually really trust this hardware, because
Yeah.
the things are open source, so people can easily check the source code. Nothing is sending back to our cloud, so you can fully trust the software that at hand. So I know people really have a think on that autonomy. So
Yeah.
we want to give the ultimate autonomy to the users. But in terms of
Okay.
onboarding, it will be easier on the MM cloud. But for the ultimate autonomy, or maybe the security side, that will be on the hardware side.
Okay. And just for the audience, can you provide a simple definition for what front running means?
Yes, absolutely. So front running means if you are giving an exchange an order, and someone else is knowing your order, and then they place an order before you, and they actually buy or sell before your order. So that is front running. So
Ah,
that's a really simple way of doing that. And why people do that is because they have a guarantee win over you, because
right.
they if they know you're going to buy something and they buy beforehand, then they are going to guarantee that if they sell immediately, they are going to earn some profits, because
Right.
of your big buy. They will just make profit. So
Right.
that's the concept behind.
Okay. So I guess before you were mentioning you got the cloud and you've got the hardware. You're pushing the cloud first. Are these how do people get onboarded? Is it subscription based? Is it do you have any offers to kind of just try out your tools before committing?
Yes, absolutely. So we actually plan to give out some of our box for free, just to give out the projects, and then they can do some marketing for us. I think for the box, that will be on the marketing side more. For the
Right.
Cloud, we are going to offer a very cheap price of around 2K per month for subscription. So people can easily come into the platform, subscribe, and then do the market making. I think the beauty of these solutions is not just they're cheap in nature. They actually we don't earn that money ourselves. We actually, when you pay us, all the money will be circulating within the ecosystem. So previously, I mentioned about the token that we are going to list out.
Right.
That token actually, when you run up our hardware solution, the box, or the software solution, the Cloud, when you run it, it will automatically give you some of our token MMS.
Mm-hmm.
So that is the token supply side. And for the token demand, basically when you are on a weekly basis, we're going to have a proposal on which token to buy. So we have an automatic buyback mechanism using our token to vote, and then you can buy back your own tokens. So when we actually calculate how much you did from last week on the market making side, we know how much to charge you automatically on the hardware or software, and then we will just use that money to buy the ecosystem's token. So the more, so for example, the more you do with our solutions, the more tokens you will earn from us.
Right.
From the VC perspective, you can actually coordinate lots of different projects because you will automatically have the MMS tokens. So that would be something new to the market, because I don't think other market makers have done this kind of token launch with the MMs before.
Right. Okay. So I guess when we look at like you mentioned the different solutions that you have, can you then address you said it's quite affordable, 2,000 a month. If you were to hire one of the big guys, what is the cost? And obviously, if you're too small with small volume, they probably won't even take you anyways, right?
Yeah, that's
Right.
true. That's true. So actually, I think for I think different market makers, they actually charge differently, but the range would be around 2,500 to 7,000, depending on which brand you are looking for and how reputable they are. So but that would be a really big range, I would say, and sometimes they take bookings as well.
Yeah. Is it true, do market makers pick up a project just to earn that subscription, no matter what the volume is? Is that true?
I think it's true. I think it's true because
Okay.
actually, I wouldn't name which market maker, but that particular market maker actually gave some projects to us because they cannot handle the kind of market making the project's needs. So so I would say because people are really focusing on marketing a lot of times for the Web3 projects, even for the market makers. So don't blindly trust on the big names. Make sure that they're really working on your favors. And the beauty of our solution is actually is autonomous. So I can't work on my favors. When you are on the solutions, you have to work on your favors. So although you may have some extra work to do, but you can guarantee that everything will be on your favor.
Yeah. I think that's the most important thing. I guess that's always the trust that you want. Like when you're trying to get listed on the exchange, there's always a question, oh, you just want my fees, right? You want to collect the fees, and maybe the person has some, target to reach for the month, but they really don't care whether or not the token does well on the exchange, right? If it goes on, if it fails, if they don't have great market makers, all they care about is they got your listing and then they collected the fees, right? I think this is always a concern with projects, maybe not really being careful with their due diligence on who they're working with.
Absolutely.
Yeah.
And so our slogan for the solution is actually the market maker you trust, because ultimately we know the market that no projects actually trust their market makers. They market makers because of their reputation, or maybe because of their cheap price, but they don't natively trust them, because whenever you see a price dump, you immediately thought, is that because of the market maker?
Right.
That's natively the first thing you will think of as a project owner. But if you're actually managing things yourself or among the friends, then you actually have a circle of trust within the community.
Okay. Well, let's talk a little bit more about that then, because I mean, there obviously are lots of projects. They do price dumps, right? Rug pulls, whatnot. Where are they coming from? If it's not the market makers, they're saying, inherently they're saying, oh, market makers are manipulating the market. So who else is it? How else is it happening?
So definitely, we need to see the distribution of tokens, because if you want to dump something, you need to have the tokens, right? If you don't have the tokens, you can't dump. So we're not normally when we engage with the small projects, they're only trading on the spot. So for the perpetual, that's another story, because for the perpetual, you can actually short without the long, but actually on the spot side, you have to have the tokens. So where do we actually see the tokens initially? Actually, on the token distribution table, when you actually have investors come in, you have the cap table, right? So the private investors potentially have the biggest proportion of the tokens. I think for a lot of the meme coins, GameFi's, that would be the biggest proportion. And when they actually dump, they're going to dump a lot. So so generally they don't actually move, but when they move, you better watch their wallets. So that's the origin. But it's difficult for the others to know that. If you are in the team, you probably know who is dumping you, but you can't really say it out loud that oh, my initial investor is dumping me now. You can't say it like that. So when the public voice saying about market makers are dumping my tokens, then no one is there to actually say the opposite.
Right.
Yeah.
That makes a lot of sense, man. Well, I guess that's why for a certain period of time, when I saw some projects who want to get listed and they want to build a use case that we're not going to dump, they say, oh yeah, our investors, they have a lockup period, 12 months or so and so forth. So you can feel guaranteed majority of the tokens can't be moved at all, right? To kind of move, make the markets. But that's not the only place where where things can dump, right? So I thought that was very interesting, because that is one of the things that people do worry about. They look at market making solutions and who to go with, right? So if a market maker really has a reputation for helping projects to make the dump, and to make the markets to the benefit of them and to the project owners and not to the investors, then for sure that they're going to get a bad reputation, right?
Yeah. That's true. That's true.
Okay. So let's talk about what else are you guys looking at? You said you at some point you want to do more integrations with DePIN. I saw that you did event with ICP, and maybe you're looking at integrating into their protocol. What's going to keep you always on the edge and ahead of your competitors?
I think we are actually trying to integrate with some of the successful projects. We don't want to do everything ourselves. For example, we want to treat our Cloud or Box as a channel. Definitely, it can do what does on a basic level for all these smaller projects. But actually, we've been thinking about what kind of idle resources are there. For example, if you are doing market making, you probably have some idle money in the exchange. And for that money, probably we can do some market neutral strategy. So it's definitely an opt-in. We won't force you to do anything. So we can collaborate with different market neutral trading teams to actually create a strategy, and then we'll put it into the hardware solution or the software solution, and then they can deploy really easily. That can be one method. And then the other method is because we are using some other people's computer, could be on cloud, could be just a hardware solution, it's a mini computer. So we have some extra compute, we have some extra network bandwidth, we have some extra storage, we can just collaborate with the bigger players. We don't have to do everything ourselves. So
Right.
yeah, that will be our strategy to move forward. Because if you want to do too many things yourself, you really can't like excel on one thing. So
Right.
so we really see ourselves as a channel, because for the project owners, either way, they have to engage with a market makers. If they
Right.
are just having some trust on other people, maybe they can try on that. But
Right.
if they want to trust themselves, they can actually use us, and then everything will be very transparent to them.
Okay. So I guess if you were to put it simply, that your bucket of customers will be these early stage companies, right?
Yeah,
Projects. And then when
absolutely.
they start to mature over a period of time, you're effectively a channel of projects that then need to work with the bigger guys and need better solutions and need larger reach in the market. So you're in a way channeling, and you've worked with these guys before, and you've managed the liquidity, so at least they've been solid, I guess, in that way. They've been managing properly. Yeah.
Absolutely, absolutely. So, if you are natively a big project, definitely go to the bigger names.
Yeah.
If you think you need some time, you need some runway,
Yeah.
come to us first, and then
Yeah.
when your project get big, definitely go to the bigger guys. Yeah, because ultimately, a professional trader is needed. If you have a really big volume, and if you're listing on multiple exchanges,
Right.
yeah, definitely go to someone with the full-time traders, because that needs really good trading expertise to actually manipulate all those.
Mm-hmm. So going back to that is the people, the customers that use your solutions. How many exchanges are these guys typically on? Like two or three?
Typically, I would say 2 or 3.
Yeah.
Because, for example, if they list on a centralized exchange, they definitely would want to list in the DEX.
Mm.
Because there's no restriction for you to list on the DEX, and
Right.
it's no listing fee there, right? So, basically at least 2. And then when you want to list on another centralized exchange, some people actually do. So generally, it's one SEX, one DEX, or two SEX, one DEX.
Mm-mm. Do you think you see lots of changes in the sex vertical, because with regulations stepping in, and maybe some of these players can no longer operate the way within their jurisdiction? Do you expect a lot of players to eventually fall out?
I believe so. So
Yeah.
the portal would change from the sex order book to the DEX order book, because
Mm,
ultimately people are just generally really are more familiar with order book mechanisms. Although it's a lot more complex in some sense, but it's you can actually put a lot more strategic orders into those order book exchanges. So I think order book exchanges are going to last. So if you are going to move from SEX to DEX, it probably will transfer the liquidity from the SEX order book to the DEX order book. That's what I think.
oh, well, that makes a lot of sense. So I think I'll ask this a little bit different. When you got Web3 projects, the leaders, and where they're considering market making solutions or partners, what criteria should they be looking at when they're looking for a partner? Besides, like, okay, do we trust these guys? Do we know these guys? What else should they consider?
Um, I think it's actually difficult. I think for the
Mm,
trusting part is definitely the most difficult and the most critical, because if you don't trust them, then why are you paying them money? Either in
mm,
USDT or in your own tokens, right?
right.
Um, that question is very hard to solve. And then the other stuff is how well they actually do. Is also very difficult to assess, because they will just give you the PowerPoints, the good thing that they did, right?
Sure, sure.
It's just like any presentation, right? So if you're
Right,
asking information from them directly, it's very difficult. But if you actually talk to the projects that they did project with, I think that would actually have the honest opinion. So you
right.
definitely need to talk to projects who use those services.
Mm-hmm.
Those would be the most useful information that you can get.
Yeah, yeah. So basically, it's the real use cases from these projects that they talk positively, then it must be a good experience. Then maybe
Yeah,
that's how they make the decision. Yeah. Okay. That makes sense.
absolutely.
Okay. Well, right now, I guess you've got you've raised 1.5 million in a seed round. Where are you at currently? You seeking money currently as well?
Yeah, actually we are raising 1.5 million. We haven't secured the money yet.
Yeah.
Because we just actually started the fundraising campaign about 1 month ago. So
Right.
yeah, right now we are still working towards that. Yeah, yeah. So there are different kind of structures. We want to actually have the early supporters who have a more seed round ratios.
Right.
Because right now we are thinking about having a seed round and then private round. And for the seed round, if you engage us earlier, you can have more seed round tokens. And then
Mhm.
the later you will join us, you will have more of the private round tokens and less of the seed round tokens.
Okay. And what is your criteria? What type of investors do you want coming to you, and who do you want to work with?
Yeah, definitely. If you have like invested in a couple of projects, and if those projects, some of them are like struggling, or some of them they are urgently needing some of the services that we can provide, I think those will be our biggest target. Because
Mm,
ultimately, when we have the investment, we need to have projects to work with. We
right.
need to give them real use cases. So previously, we have been using our algorithms for a lot of projects, but those projects are not managed by themselves. Like
Right.
I help them to manage. So that is another different kind of use cases. But we can basically guarantee the investors that our algorithm has been bullet tested, so everything should be really good to use immediately.
Okay, that sounds good. Sounds good. Right. So I guess look, anyone wants to learn more about your solutions or VCs wanting to invest in you, I'll share on this podcast all the links in the description. This will all also be on YouTube. So I'll make sure that you and I coordinate to make sure we've got all the information there.
Thank you so
But
much.
yeah, I want to thank you for joining the show, Peter. And yeah, good luck with your fundraise. And I look forward to continue following you guys and see how you grow the market.
Thank you so much, Arthur. Very nice to be on the show. Thank you.
Hey, so that concludes this episode of the Startup Voyage podcast. I would like to thank all of you for listening to this episode, and I'd really appreciate it if you leave any type of comments that you'd like to share, because it helps to feedback on how I deliver these podcasts.